Recording in progress. We're official. So we're going to give it another, another 5-ish minutes for the Bali timing to complete and people to show up. Everything's fine. This is where we don't panic, right? Because the whole point is to get us to panic now. We don't panic, Nick. We don't panic. Don't panic. We don't do it because of panic. We do it because of data, right? Yeah, strategy, not panic. Yeah, those are two different things. If your strategy says panic, then you panic. I'm just kidding. Okay, so we never panic. The whole point of this market is, all these markets is they'll go up and they'll come down, and if we can try to ride the waves, great. If you just hold through all the dips, people have some of the best traders on the exchanges where they track traders are people who are dead. They're dead. They didn't do anything. They simply just held. They didn't worry about what the bond yields were doing, whatever we're doing. They just made the most amount of money because they simply held for long enough, okay? That we're talking about crypto. So before we get deeper into all this stuff, we're gonna go around and we're gonna do a bit of a, what's your name? How do you research crypto? And you gotta say it in 15 seconds, because if you can't say it in 15 seconds, then you're not focused down enough. So my name is Sim. The way I research crypto is I have experts, yields, bonds, stocks, crypto, on-chain analysis, TA, plus a bunch of paid resources that we collate together, and we get that knowledge into one understandable piece, and we get that to clients.
Hey, my name is Alec. The way how I join on Telegram, WhatsApp, and other people. I'm listening to them. I'm joining the conversation. Of course, I'm using YouTubers to predict what they're saying, and I have my little knowledge and trying to compare all of those, what they're saying, and get to the point.
Name is Connor. How I research is I just devour a lot of content, I read a lot of stuff, and I check for information consistently, all the different places from different people, and paid content, educational content, YouTube, all of it.
I'm Jason, and I mostly just follow a few people on Twitter, YouTube, and Sim, and I need to get a better strategy for doing research.
Hi, I'm Stefano. So I do my research through YouTube content as well, Twitter, and Sim's group, and then all that data, I usually talk to my dad because he knows this market better than me.
Hi, I'm Mandy. I'm completely new to crypto, haven't got a clue what I'm doing, so I'm here just to pick up what I can along the way.
I am in a few paid groups, so I listen to people who are smarter than myself. Instinct. And I'm constantly going down the rabbit hole into areas that interest me and just learning on a daily basis.
Oh, good morning, I'm Nick. I think as has been mentioned with YouTube and Telegram, stuff like that, but for me, if I'm looking at a particular crypto, I like to look at the tokenomics, the fundamentals, the team behind it, the history, what it's replacing, the white papers and stuff like that. So most of my portfolio, I have tried to research the background behind it and the history.
My name is Umnia. I'm very new, so my research is your group, the paid group, these meetings, and just looking at charts and trying to understand, or at least get familiar with the charts. Yeah.
Hey, I'm Jonna, also new, so my research is the paid group. And then YouTube, I started following a couple of people on Instagram, downloaded some podcasts and some books, so that's where I'm at right now.
Hey, my name is Erica, and I'm still fairly new as well in this crypto world. And I do follow the Telegram threads and watch all the basics and stuff on YouTube. There is a lot that I still don't quite get my head around, but trusting that I'm on the right way with the strategy that I've got set.
What's your name and how do you research crypto, if you research crypto?
My name is Carolyn, and I'm just beginning to research crypto, so I've downloaded some audiobooks, and I'm here. Thank you.
I'm Ken, and I just joined a 4-week crypto course.
Amazing. Good way to start.
Yeah?
Absolutely.
Hi, I'm Michael. I have a few YouTube channels that I'm watching, and I have my own NFT project. So I'm getting a deeper education in NFT.
Hello, I'm Noelle, and I've been into crypto since about April 2017, and I've also just joined the Unit Masters Blockchain 6-week course. So and also I have paid crypto blockchain newsletters, so I study those.
I'm Mia. I've been into buying and selling crypto maybe for 4 or 5 years now. And I'm also doing what is it called?
Unit Masters.
Unit Masters. And yeah, I've just come here to expand my knowledge about what's possible for us when the whole paradigm shifts.
What was that? Hi, I'm Duke.
What's your name and how do you research crypto?
How do I research it? Yeah. Oh, so hi, I'm Duke. I research crypto by following certain YouTube channels and talking in this group and getting my information that way too. Thank you.
Thank you for sharing. So it's really important to have good resources around you so you can actually keep an eye on things, right? Because crypto, it moves so quickly that either you have to make sure that you understand what you're investing in from the beginning in a fundamental way so that you can invest knowing that you don't have to worry about the volatility. That's one strategy, which is the HODL strategy everybody calls. If you simply just hold, don't touch it for a long time, you can make a lot of money in this market. But at the same time, if you hold the wrong coins, you're very, very likely to make zero money in this market, right? So if anybody's held through 2017, you know that many of these projects that were supposed to be the bee's knees and change the world ended up going nowhere, right? So either do the research upfront really well and then make sure you hold the coins, and then you have a strategy that says I'm going to hold for an extended period of time and ride through the volatility, or make sure you have some people that are experts in their fields, not just one, at least 3 in each field, so you can vet the different knowledge that's coming in and understand how to make decisions, right? Now, what we're going to be looking at today is kind of like my understanding of this. Where I come from is, I've studied the financial markets for about 15 years and just trying to understand from a basic viewpoint of everything is about value. How does value move around? How has that been kind of coerced into the financial system where they've turned, value is supposed to be us adding value to each other's lives and improving each other's lives. That got turned into financial products where you can, have different derivatives and different things that nobody even understands that end up not really adding any true value to the system, right? So just looking at all that, we always have to zoom out a little bit and see where crypto fits in that. So let's zoom out really far back, right? What's the point of money? The point of money, it's like a battery, right? Money is like a battery that stores value. Somebody adds value to society, to other people's lives. They get to store that amount of work that they've done in a storage method called money. And then later on, when society owes that value back, they get to use that storage method and convert it back into value from society and get goods and services and, clothes for your kids and yachts, if you really want yachts. I know you want a yacht, yeah, so I wanted to mention yachts for you. But it's a storage method, right? What are assets? Assets are investments that you invest in that will generate, that will at least maintain the amount of value you have. You can look at value, but in today's world, we call it purchasing power effectively. How much value can you purchase with it, right? So assets should store your value and maintain your purchasing power at the minimum. They should be inflation, and they should be growing at a rate that at least makes you more money than they're printing out there, right? Because money was supposed to be this immutable system, gold, that's super difficult to pull out of the ground. Or it was like leather and shells and clothes and cotton when that was hard to get. Not even cotton, it was linen actually. But the idea is it was supposed to be something that's limited, that has the dynamics around it, that it makes it rare, makes it kind of equal as far as acceptance across the world. We then turned that into paper money, which literally grows on trees. Money does literally grow on trees. It's made of linen and paper. Then we gave that control to the powers that be, the government, central banks, bankers, to control how much money gets produced. So all of us go work really hard for our money. They go and just print the money, okay? Then they took that and turned it into like digital money, which they don't even have to print. They just hit buttons on a computer and print it. And then they took that and turned it into financial products, like derivatives and options and ETNs and ETFs. Like, once you look at these things, you realize, wait, most of these are like just scams. They're scams set up in a way so I don't understand it. I got to give my money to some guy who takes all of my money and goes, yeah, we're going to put it some here, put it some. If you guys have seen that like South Park bit, he's like, kid goes in to put $100 into the bank and they're like, yeah, we're going to take that and we're going to put it into overseas derivatives and we're going to do some cash transfer and it's gone. And that's the truth. That's how the markets have worked. Some guy way smarter than you takes your money, puts it into the magic black box called investments, which you're not even allowed to participate in unless you are over $1 million net worth. So plebs like us, we just can't. But he puts it into some magical place that's making him the most amount of fees, and he makes you 7%. Oh my God, he made you 11% in a year. That's just life-changing money, apparently. We're just crushing it. Whereas if you made 25% last year on stocks, you're probably like, I am such a genius. Whereas they printed 30% of the money supply. So you basically lost 5% of actual value in that process, right? So still the game is being played in this way where we're being manipulated and value is being stolen. So somebody comes along and by somebody, in my approximation, it was them, the bankers, the powers that be, because they wouldn't let a new form of money get released and let us use it without them controlling it. But somebody somewhere decided, we're going to remove governments, we're going to remove people, we're going to remove banks, we're going to remove everything and just come up with a code that runs on computers that controls how much money is printed. It's printed at a set rate, it's limited in supply, and that's what we call Bitcoin, the most basic version of money storage. Our money's been digital the whole time, so it's not like we're switching from paper money to tangible money to intangible money. Our money's been numbers on a screen for a very long time. And as a matter of fact, most of the value that we have in this world today is just numbers on a screen. Most of it is actually in something called derivatives, which are just bets. Most of the value. If you took every single thing in the world, all the stocks, bonds, real estate, everything, combined it together, it's about 900 trillion. And there's about 1,000 trillion in just these bets. Okay, which most people don't even know about. They don't understand what these bets are. But the point is, all of the value is in these silos where it's stored away. Crypto is a new asset class. The most recent asset class that was created was stocks. That was hundreds of years ago that stocks were created as an asset class. And the asset class is where you put your money and grow your value, remember? Crypto is a new asset class that's been invented that reinvents a lot of the investing opportunities and it gives it to the average people. But the other thing crypto is, it's a new way of using the internet. It's a bunch of computers connected together in a way that lets you do things that we already do in the world. But if you just look at the asset class part of it, that's what we're going to focus on today. We always talk about utility and what is it going to do, and we've beat that horse quite a bit. So if you haven't watched the previous talks, please make sure you go back and watch it. But we're going to look at the asset class. crypto. Gold was invented once. Money, cash, was invented once. Different currencies keep getting invented, but even those get invented once and run for 100 years sometimes. Stocks were invented once. Bonds were invented once. Hell, oil was invented once. All these things were just, there was one point that the invention started, and whoever got in at that point became wealthy beyond anybody's imagination. Now we have an asset class. Bitcoin does the job of gold better than gold. Ethereum does the job of the internet, arguably better than the internet. 10,000 other cryptocurrencies, well, not 10,000, half of them are scams. Thousands of other cryptocurrencies do the job of many other things that were invented once better than those old ways of doing it. The same way the internet did the old world better. Crypto does many of the things the internet does and the old world does better. And all of them are being reinvented, and we're being given it to say you can invest in it as an asset class. So we always have to keep that viewpoint. That bigger viewpoint is really important because it's a brand new asset class. Do you think it's going to disappear tomorrow? It literally figured out a way of adding more value to people's lives than all of those old ways of doing it. And they still haven't even come to fruition. We're just getting started. Like, as far as crypto compared to the internet, we are where the internet was in 1997. Imagine you got into the internet in 1997. You know what would have happened? The dot-com crash. And you would have lost 99% of your value. If you had Amazon, you would have lost 98% of your value. Now, you wouldn't have lost it. It would have gone up, and then it would have crashed 98%. And if you panicked, you would have lost 98% of your value. But if you held Amazon, you would have made life-changing money. Now, there were 10,000 other current companies that existed at that time. If you held them, you would have actually lost all your money because they were scams. They were just pie-in-the-sky ideas here to steal all your money. So as an asset class, crypto is here to stay. As a matter of fact, this is just a nascent, it just got to the level where institutions even start paying attention. When it comes to asset classes, if you're not at $1 trillion, nobody even cares. You know, you're too small to even play with. Now we're just getting to the 2 trillion mark. Now they're starting to kind of wake up like, oh, well, that's interesting. This thing's done 200% for the last 10 years. It's done 2 million% returns in the last 10 years. But now that it's at a size that we'd like to play with, we're interested. We want to invest the $500 trillion of value and maybe like a little piece of that into crypto. But you can't just look at crypto and think crypto, and even just crypto, Bitcoin. And Bitcoin, just the Bitcoin price chart on the hourly time frame. You're missing the point. You're on the roller coaster. You follow that thing, it's going up and down, it's being manipulated, and you're like, I'm feeling like Nick does, I'm feeling great. Oh, I'm gonna murder somebody. I'm feeling great. Prices are down, I'm in depression. And it's like, you can't be on that roller coaster. Yeah, suicidal homicide, right? So you have to zoom out. You gotta zoom out. And if you, let's say you just have Bitcoin, at least zoom out on the chart and put it in log. Because these things grow in a logarithmic, they're networks that are exponential in growth. They're not linear in growth. We're used to life being linear. You know, you go from 1 to 2 to 3. Bitcoin goes 1 to 10 to 100 to 1,000. You know, and that's just how these things grow, and our human minds aren't used to thinking about things like that. But at least zoom out and be on a bigger scale so you can see what you're investing in. But then you zoom out of that again, and then you look at, okay, this is just price action. Let me look at the network itself. Like, that's called on-chain analysis. You know, as soon as you start looking on-chain stuff, you see, oh, there's more people using it. It's growing over time. Transactions are going up, more value is being moved. So it's doing the job that it was supposed to do, and it's growing. You know, when more people started using Google, Google became more valuable. When more people use Facebook, Facebook became more valuable. These networks depend on the users and how many users are using it, and if it's doing the job that it's saying it's going to do for society. Okay, so now you've zoomed out, not worried about the price action as much. We've looked at what the thing is doing. Now let's zoom out again and look at the whole space, the crypto space. There's 10,000 different cryptos. More than half of them are scams, literally developed to scam you out of your money. But there's like 1,000 of them that are really solid projects. When you look at what they're going to do, you're like, wow, that could really change stuff. Unit, that could really change stuff. And the right people are behind it, and the right teams are behind it. Okay. You know, there's like, in my approximation, around 1,000 of them that I'm like, wow, these are solid projects. Now, statistically speaking, 90% of startups fail. And out of the 10% that survive, 9 out of those 10% are created by people who built startups before. Now that's a great little metric to run your statistical analysis by. You just go look at the team. Are they capable of building a project? Have they built a successful one before? If they haven't, the probability goes way lower that they're going to actually succeed. So now you've been able to narrow down 1,000 down to 100, down to a few. Or you've taken 10,000, gotten rid of the scams, gotten down to 1,000, and then got that down to 100 projects that actually passed this checkpoint. But that whole asset class, let's just say those 100 that you're looking at, they're doing what they said they're going to do, or they're capable of doing what they said they're going to do in a way that's going to be so effective that even one of them could be a Google or an Amazon, and that would change your life, let alone finding 10 of those, right? So, okay, so now you've invested in stuff that's solid, you've zoomed out a little bit, but that's just the crypto class, asset class. That's $2 trillion, not even $2 trillion of actual value, that's $2 trillion of nominal value in the $1,900 trillion world. 2 out of $1,900 trillion of value. The rest of the value is actually sitting somewhere else. It's sitting in real estate, stocks, bonds, derivatives, commodities, bunch of random financial products, insurance, cash, art. There's a ton of it sitting in art. A lot of money is laundered through art. Sorry, kept in art legally and legitimately. So that amount of value that's sitting there, it has gateways to move into this asset class. This guy's moving art onto the blockchain, developing rings that are art, and you're developing art and turning it into NFTs, and you're selling that. Now you're moving art onto the blockchain. Gold is moving onto the blockchain through Bitcoin. The internet is moving onto the blockchain through Ethereum, Solana, Polkadot, all these things, right? But you have to look at those silos of value to be able to predict where crypto is going to go, at least in the shorter term. And the shorter term, I mean on the monthly scale, right? Because on the bigger scale, if you just know this other stuff and you buy the right projects, and you're not getting scammed, you're good. Like there's projects that I'm holding, I just buy them and I forget about it. Even now in this dip, I didn't sell some of them. I'm not going to say which one, but you know which one. It's my favorite. It's my favorite. And I'm not going to say which one because I don't want you guys to go hold that one because you just heard me say it, right? But the point is there's some projects which I believe in and I know their fundamentals are so sound that I don't care about the dips. I know they have 3,000% upside potential this bull run, so I'm not worried about the 30% more going down or whatever. I got them at good prices anyway. But on the shorter scale, you have to then build a mental picture. And you can't just go and buy an asset and then sit on it and think, well, that's it. That's it. I clicked here, I clicked there, I put some of the coins in my pocket. Guess who's getting rich tomorrow? That's not how it works. There's way smarter people than you out there whose job it is to come into your pocket and take it because you were sitting complacent and not knowledgeable about what was going on. So we have to build a mental picture of what's going on, how does the money move, how does that affect crypto, am I exposed to it, am I going to have to do something, or what research can I do to at least learn that? So let's look at that. How do those markets move? At least, again, this is my opinion, this is according to the research I've done. I'm not some Nostradamus, I've just listened to people way smarter than me and built a mental picture over 15 years. How does value move right now? Value is transferred, like we discussed, across rails, and it's put into different silos. One silo, banks. One silo, stock exchanges, which are private companies. One silo, derivatives. One silo, commodities, art. So there's these silos that it goes through and sits there. But those silos aren't just they're not just passive. They don't just sit there. The value flows back and forth in a dynamic way between those because financial experts know how to play the game. And when certain things happen, they move value one way. When certain things happen, they move value another way. And that's what moves crypto along with it. So here's how I see crypto moving, okay? Bonds going down means people are moving out of an asset that they think is the safest out there, even though for me, it's extremely stupid. It's an asset that gives you 1%, 2% yields, okay? But they're printing 30% of the money supply. So you're losing 28% at this point. And then next year, they're gonna print more than 30%. In 10 years, they're gonna have to print over 100%, maybe even up to 1,000%, depending on how they wanna inflate this thing. But it's a super safe asset where companies and billionaires and all of them like keeping their money because it gives them a small amount of yield over cash. Because cash doesn't give you anything. It just only takes it from you from how much cash they're printing. If people are moving into it, that means people are risk off. They're starting to de-risk themselves and go into a safe asset. Cash is even safer than bonds because it doesn't do anything. Apparently you lock it in a bank and then it just sits there. So if people are moving into cash, which we know the US dollar is backing most of the currencies in the world. So when you look at it's called the DXY, the dollar exchange index, that will tell you, are people moving into cash? So if people are moving into cash and people are moving into bonds, that means they're not in stocks. They're not in, or at least they're moving it out of stuff that would have made them more money. But there's a reason they would be doing that, right? They would think this is risky. I think I'm gonna pull my money back, put it into cash, put it into the bonds. And there's corporate bonds and government bonds. But the point is, if they're moving into that means they're becoming safer. Something has spooked them and they're becoming safer. Beyond that is stocks. Stocks are riskier, and there's all different levels of risk on stocks. But stocks are riskier, but they give you a bigger return. They might give you a few percent, they might give you 11% on a good day. If the economy's shut down and stocks are on a run and they're just printing money and putting it into the economy, then they might go 20%, right? But you're still losing the 30% that they printed. Crypto is like the riskiest thing on that whole scale. As an asset class, crypto is the riskiest because you could put your money into the wrong coin and lose 100%. You could have a negative 100% return, which a lot of people execute that strategy perfectly. They put all their money in and then they panic and then they lose all their money. And crypto has become really good at convincing people to give up their life savings. Okay? And it's because crypto isn't crypto. Crypto is those same financial geniuses, AKA vultures, whose job it is to sit down and they know the technique of tricking your psychology and taking all your money. But then crypto also has the potential to do 2,000,000% in the last 10 years, right? So risk, reward. So when you see crypto moving, you see it go up and then you're like, is it gonna go down? If we're just staring at crypto, and you're like, this candle went here and this price action happened here. And maybe the on-chain's telling me stuff about crypto and I'm gonna guess where it's going. You're hopeless. You're hopeless. Because you're in the ocean of the financial world, but you're looking at the bucket. No, you're looking at the drop in the bucket. You're going is this drop gonna go left? Is it gonna go right? No, but there's an ocean, right? So you gotta understand the ocean that you're playing in. So what's the reason that I made that video today and I started ringing bells? I'm not some stock genius. I'm not a bond genius. I'm probably not even a genius. See how I said probably there? But I listen to people who are way smarter than me. Somebody who's been in bonds for 15 years, okay, I'll listen to 3 of those guys. Somebody who's been in stocks for many, many years, listen to a few of those guys. Somebody who's been in crypto longer than me, listen to those guys. I've been in crypto 9 years, so I have a feel for all this stuff, and I've been through 2 of these cycles, and they're cookie cutter. They're absolutely cookie cutter. The same emotions, same all this stuff, and then if you research the Wall Street cheat sheet, if you haven't, print it, XL it, put it on your wall, wake up to it and go to sleep to it. Because that's it. That's the whole game. It's called the Wall Street cheat sheet. That's how they cheat you out of your money. So understand, for me, I just see that playing out again and again. And it just the same thing plays out again and again. Same psychology, same dynamic, same everything. Same thing in the, if you're in the paid group, we just did the talk explaining how the same chart pattern is playing out in stocks on a 100-year, as played out in the 4-year cycle, as plays out in the 6-month cycle, as just played out in the last 2-month cycle. Even like sometimes you even zoom into like 15-minute cycles and you see the same thing playing out. Maybe I'm just like paranoid at that point. I'm just like looking for patterns and stuff. But if you just look at the ocean, that's going to tell you where the wave is going. So the ocean is the entire financial market. That's going to tell you where the wave is going, which is like bonds and derivatives and stocks. And that's going to tell you where the drop is going, which is crypto. And then within the drop is the molecule, which is one crypto that you own. So you can have an idea of where your molecule is going to move if you just look at the ocean. So going back, like what freaked me out? You know, this whole Evergrande thing happened. If you don't know what the Evergrande thing is, please Google Evergrande. I'm sure you'll be able to find all these details.
Is that real?
It's real, but it's not what's actually going on, right? It's real, but if they're telling you to look at it, then it's the magic trick. It's the facade, right?
There is a company that's in trouble.
Oh yeah, there's a company that's in trouble. I mean, you could see that coming from miles away. Like 8 years ago, I remember like the Chinese poured more concrete than the entire US's 200-year history in 3 years. Do you think that's sustainable? Do you think that's how growth works? That we pour the entire US's worth of concrete in 3 years, and then we do it again in 3 years, and then we do it again in 3 years, and we've done it, you know, they built a bunch of US's out of nowhere. Who is supposed to pay for all that, right? If this is what I'm saying, understand the ocean is like, you just take on debt, just pour 4 US's in 12 years, in 15 years.
They also bought all the rebar in the world.
Everything.
They bought all the iron structure.
They bought all the iron. They just buy up everything that they possibly can, and they're not buying it with cash. They're buying it with debt. People are greedy. But the point is, when you were looking at that, you're like, oh well, this is a terrible, terrible catastrophe coming up. I was ringing bells in 2016. I was like, it's over. It's done. And the thing, they kept pushing it. And this bubble, they could keep going until potentially 2029, by which time they would have to inflate the currency at 1,000% per year just to keep this bubble going. And I'm telling you, like, we did that analysis in that group where we looked at what let's do it right now. Let's do it right now. Analysis. Yes, please. One sec. Let me just load this up. Okay, this is stocks. Okay. The biggest crash we've ever had in history, ever, was the 1930 crash. It was decades of turmoil and just, it changed lives. Our grandparents remembered it. It was like a war that they went through. You know where it is on the scale? Right there. That was the bubble that blew up, that crushed the entire world. When it was happening, it looked horrible. When it was happening, it looked like that. So it's not just a joke, you know? Yeah, but zoom out. And then what happened? Then the market grew. This is stock market. Then we had the 2000 bubble, the dot-com bubble. That was crazy. It wiped a lot of people off the mat. But it also made a lot of people really, really wealthy. Then we had the 2008 crash. That was crazy. Remember that? World came to a standstill. Oh my God. It's known as the Great Financial Crisis. This is where we are now. Do you think that just goes straight up? Like, anybody who knows basic TA, how do you think that pattern is going to play out? Do you think it just infinitely, just forever, for the rest of history, just goes completely straight up, and that's how money works, right? But when you look at, that's why I love looking at Bitcoin, simplified version. Because we keep things simple here, none of these bars, okay? 2017, this was the bubble, or this was the cycle, right? It's almost identical. We had nothing, nothing, nothing for a while, one bump, correction, two bumps, correction, a little correction, and then a spike, and then crash. Nothing, 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 one bump, correction, two bump, correction, corrections along the way. I guess that's the one that I would put with the other one.
So it's one with stock market and one Bitcoin.
Yeah, yeah. So this is stock market on the 130-year scale, because stock market moves slower, technology moves much quicker. And these things also play out on the 100-year scale. They play out on the 4-year scale, 10-year scale. Depending on which market it is, they can play out on, and they can play out on the monthly scale. And this is Bitcoin. Now, I'm not saying that's what's going to happen this time. It's most likely not going to happen this time because we have this chart to look at, right? But the idea is markets behave the same and they all go according to, can you please type in Wall Street cheat sheet? Look at that. I've searched this so many times, Google already knows what I'm looking for. It's all this. It's always this. Stocks are right here. Oh my God, I made 25% last year. I'm so rich. I'm such a genius. I went onto Robinhood and I clicked 4 things and I bought some Tesla and I'm 19. I don't even know what stocks are, but I'm such a genius because I went to Wall Street bets and I made so much money. Okay? That's this. I'm a genius.
So where are we now? I think we're up halfway.
In crypto?
Yeah.
Depends on what scale you're looking at. Right now, we are actually somewhere here if you actually truly look at the shorter term time scale. Because we went up, we had this huge run up, everybody got euphoric, everybody got super happy, we had a nice little dump, things kind of stabilized. Then we're having a bit of a sucker's rally right now, potentially, right? So if you're looking at short term and you're thinking like, man, I want to make money within the next 3 months, guess what? Why do you think I'm out, right? But on the bigger scale, on the yearly scale and the actual bull run, I think we're somewhere around here, right? Because we had nothing for a while, then things trended upwards, and then things have corrected. There's going to be these little dips. And now going back to the other chart, if we take this as a standard example, we're either right here or we're right here. Now, I'm not saying it's going to go straight up next. If the stock, this is where the ocean makes the difference, because last time the ocean wasn't moving, ocean, which is stock market, bonds markets, they weren't collapsing, they were stable. So crypto had this beautiful run up, right? But now the stock market's going to go, potentially. Tether is going to be made illegal, guaranteed. That one's guaranteed. Our overlord Klaus Schwab has a bunch of other stuff planned for us. So like we don't know what's. Yeah, he's our bestie. Yeah, he's a World Economic Forum. He's a good guy.
He's a good guy.
Yeah, he's a really good guy.
He's the worst.
He's the guy who's like, you will own nothing and you will be happy. He's that guy.
We don't like him then.
He's okay.
He's the architect of the Great Reset.
He's the head. He's at the head of all of it. But he's the one with.
I don't like him already.
Yeah, not even just him, but those people are the ones whose plan it is to come take everything from you and make you happy by taking everything from you. And the way they're going to take everything from you is you're going to give it to them. You're going to hand it over. If it's assets, you're going to be on this, and you're going to hand it to them. You know how? If you're in stocks, you're going to sit and wait. And your stocks are going to crash, and then they're going to correct, and you're going to wait. 2023, 2024, 2030. By 2030, you have nothing left. And you'll be so happy. You'll be suicidally happy. There's going to be a million things. If you have property, they're going to come out with ESG taxes. They're going to come up with special taxes that basically tax you out of existence. People think, land is safe. No, it isn't. Land is the hardest thing to move. You ever try to move land? You can't. It's not very liquid. So the point is, in that bigger ocean, the other game is done. The stock game is done. The money was to be made back here. The real generational wealth was back here. The semi-generational wealth was here. These were the last opportunities of generational wealth. I mean, sure, even if you went from here to here, you would have made some pretty good gains. So from the 2008 until now, you would have, you would have beat inflation. But it's over. That game's over. Yeah.
So the black swan event.
Yeah.
How is this gonna? I mean, if stock markets crash, what does that do to what to like crypto?
Great point. So let's even back up.
Can you repeat the question?
Yeah. So if the black swan events happens and the stock market crashes, what does it do to crypto? So we're gonna get to that. I always like to build a bigger picture first. We zoom out really far and then we zoom in. What are the signals on this? Okay. What are the signals that tell you that the stocks are not having a good day? When bond yields go up and when people start to move into bonds, so how do we know that? This is 30-year bonds. Now we're going to get complicated. We're going knee deep. Okay, bonds were trending downwards for quite a while. And now bonds have started to go up. And when you look at the shorter time scale, money has started to flow into bonds. This green wave is money flowing into bonds. That's why I love market cipher. It makes it stupid simple.
From where? The stock market into bonds?
Somewhere. Value is coming from somewhere, from other assets which would have outperformed bonds.
Crypto as well,
Almost certainly, right? I don't know. There's no way for us to know where the value is coming from. The point is, the ocean has started to move, and the water's flowing. Water, which is value, has started to move into bonds. It has started to move into dollars. The momentum is shifting towards dollars and bonds. It has started to move out of stocks. Okay? Money was flowing into stocks in a big way for a long time. But now, it is a flowing out, and the momentum is shifting. It was just positive, positive, positive. See all these like blue waves, positive momentum with little dips, positive, positive, positive. No, now we're turning negative.
When was that started?
This started to go down September 3rd. Yeah.
What happened on September 3rd?
The people who are smarter than us realized that Evergrande's.
Was there something like the Evergreen?
No, Evergrande was released to us around like September 15th, right? So they get their money out first before they know. Yeah, but not in mainstream media. They haven't been pushing it on us, right? But they knew the money started to. What actually happened is this. It's on the Dow. Dividends got paid out.
Oh, right. So then people sell their stocks after they've received dividends.
They got paid out, right? So people got paid out, and the next thing that they did is started dumping. And again, approximation. I don't know this for sure, but the data lines up.
So do dividends get paid out at any particular time, or usually in September?
It depends on what your dividends are, but there's like quarterly, there's yearly. Again, I'm not the expert on that. Yeah, please Google that and come back and tell me when the dividends are paid, because I just look at all this stuff, But the point is, money's flowing out of stocks. Money's flowing out of the tech stocks, which have been the best performers the whole time. They're the ones who are carrying the market. Momentum is shifting negative on them. And what really rang the bells for me is my analyst who was like, wait, look, are you kidding me? Like, this whole thing has just been on an upwards trend for a long time with higher highs and higher lows. And for the first time, Evergrande put in a lower low. Now we're going back, and we're probably going to put in another lower low. And that means the structure is broken, and there's panic in the markets. Great. So the point is, it's moving out of bonds. I mean, it's moving into bonds and dollar. It's moving out of stocks. It's moving out of crypto at this point, right? What is crypto doing?
So correct me if I'm wrong with the language now, could this indicate a potential bear market?
Yeah, it could. It definitely could. Because like right now, what was everybody expecting, right? Everybody was expecting that the pump was, we were saying the market was going to maybe top in September, Some of the models were saying in September.
So in relation to, let's say, 2017, September, in relation to 2017, September, October, November, December was a crescendo in the market. I remember in January 2018, that's when it hit 20,000. Then you're saying this is a different time frame? No indication of calendrical time. This is not that.
The end of the bull run. Being the end of the bull run, because when you're looking at that ocean doesn't move like the drop. This is why I like the ocean philosophy or the analogy, right? The ocean is so much money. It takes that money is kept by multi-trillion-dollar entities who take a year just to have shareholders meetings to decide what they're going to do. Trust me, I've worked for corporations. I've helped them with crypto strategies.
I also read yesterday that Jamie Dimon said that he thinks Bitcoin will go to 400,000, possibly, which is a pretty large statement to make by someone who hated crypto, right?
The moment Jamie Dimon says that, you should run for the doors. The moment Jamie Dimon says it's going to zero, you should go buy it. Do exactly the opposite of everything that MSNBC and Jamie Dimon say, and that's an 80% success rate on that strategy. There's traders who literally just watch mainstream news and do the exact opposite of what they say, and it's an 80% success rate. And these are day traders, right? So as soon as he says that, that really rings a bell. You know, all of a sudden, hater of Bitcoin starts to say it's going to 400K. Guggenheim starts to tell you it's going to 400K. Get out. But the point is, could it be a bear market? Yeah. Because you know what we're not expecting? A bear market. If we're not expecting a bear market, we're putting all our money in. It's okay. It's just a little dip. And then, you know where we are? In the shorter time scale, we're complacent. We're in the complacency phase, right? So we've gone through it and we're expecting it to bounce upwards. So it would be really wise. And if you guys remember, and go back and watch the videos, we were thinking about this. I was like, the logical thing would be for them to crash stuff around September, and then again at the end of the year, maybe in one big crash, maybe two dips, because that's when we're expecting it to go up and crash. So the point is, the whole point of this game is to convince you that it's the end. So what do? You go and sell all of your coins. And then somebody smart comes in, the person who convinced you to do that, comes in and buys up all your coins at a really cheap price, and then drives the price up because they're buying trillions of dollars worth of it. And when I'm saying the ocean moves slowly, their trillions of dollars don't move the way our dollars move. You know, our dollars, click, 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 boom. You want to move $100 million? You know how many phone calls you have to do to get that done? You know how many partnerships you need to have to do it? So that's just $100 million. That's like nothing. That's like a burger for them, right? So when you're talking about that larger amount of money moving, that is going to move into crypto this time around, it takes a much longer time period. So my approximation is in the shorter time scale, we're somewhere here. We're probably going to go down. Maybe, I don't know. Maybe we're going to correct for some time. Maybe from here, market corrects and goes back up. But if something happens in that bigger ocean, if that stock market's taking a tumble, we are going nowhere for some period of time. Now, if you make any
indicators are indicating that we could be heading.
Yeah, like
look at the bonds, stock market, everything is aligning itself to say, hang about.
the other thing is the whale watching.
The whale watch.
The whale watching. You got to go whale watching. It's the best activity in crypto. Very few people do it. They're on Glassnode. Okay. They are in complete hibernation, and many of them are actually leaving their grazing zones. And so this is what the whales did up to the beginning of the year. They were accumulating. While nobody was looking, whales are grazing. This orange line is whales. The number of people holding more than 10. I wouldn't call them whales. We call them like sharks. Maybe like orcas or something.
Only 10 is a whale.
Sorry?
Only 10 is classified.
No, 10 is still not a whale. Like 100 is a whale. 1,000 is like a real institutional sized whale. 10,000 is like the real big guys. Yeah, those are real whales. Great whale. Yeah, great blue whale. Blue whale. They were accumulating up until January, And then right around we got the news, hey, this thing's making some people a lot of money. Guess what they were doing? They were selling it to the suckers who were running in, right? And they sold it all to us. And then most people bought it here. And now when the prices went low, they picked it up a little bit, but still mostly, and again, this is just 10. This is somebody who has $500,000 of money, $500,000. This is normal people, you know? Not the average person. I never said average, I said normal people.
What's the difference between the grey line and the red line?
So the gray line is the price of Bitcoin.
Right.
Yeah, let me zoom out a little bit so it'll be easier to see. Gray line is the price of Bitcoin. The orange line is the number of people who have 10 Bitcoin. Number of wallets that have 10 Bitcoin, not even just number of people, right? Now this statistic can be manipulated. It isn't like it's just perfect, but it does give you a general idea of where the market's flowing, right? Because everybody's not going to go through the trouble of manipulating and holding 100 different wallets. Okay.
So as the price goes up, they can sell it.
Yeah, because the whole trick is drive the price up while you're not looking. Okay, the trick. Well, they're going to buy it from the exchanges, right? Exchanges hold the crypto. Exchanges hold the Bitcoin. While you're not looking, 2019, 2020, accumulate. And then when retail comes in, find, because if I have 100,000 Bitcoin, I need 100,000 suckers to sell it to. So what I do is I release some news saying, hey, guess what? Bitcoin's making a lot of millionaires in the mainstream. People go up and I sell into that buying pressure. And it takes months for them to actually sell it. That's why they did this. They kept price in a range and sold it off to the people. Okay? But what should have happened is you do that so that, because what happened here? I had something that was worth more. I drove up the price. When the price was high, I sold into that pressure. And I sold it to somebody when the price was high. As that selling really started to hit the market, the price drops, and especially manipulation can make the price drop really quickly. The price drops. Now it's worth less. I have money. What should I be doing? I should be going back and buying it, right? At 50% sale. I created a 50% sale for myself. But they're not. They're not. I was expecting this to recover in a big way. Like,
So what's the rationale behind them not, do you think?
they know something we don't know.
They know something's coming.
Not even. Yeah. And like,
for it to go lower.
and they know something is on the horizon because they're gonna do it. Right? They're the ones who do it because they control the money. They understand all this stuff that I just spoke about. I'm like a child speaking about these things. They are the ones who created that whole system, and they see the Evergrande. They build the Evergrandes and they leave them as nuggets. And when they want to pull the pin on it, they pull it like clockwork. So they know something's coming. And I'm not saying they are just one big entity. No, this is just like how financial markets move. You know, financial markets and experts are able to see things ahead of time because they understand the nuances of what's going on in there. But the point is, okay, this is just 10 Bitcoin. This is 100 Bitcoin. Same thing. Sold into that pressure. It takes them longer to sell because they're bigger. Just straight trending downwards. Sure, it took a little bump up here, but we don't even know if that's just a temporary bump, if it's going to keep going downward. But the trend is, those whales are going away. 1,000 Bitcoin. Sold into the pressure, maybe bought up a little bit now, but nothing to say that this couldn't just continue further. Sure, seems to be turning a little bit, you know, it's good news, but it's not confirmed. So when smart money isn't buying it, smart money sitting on the sidelines, when they have a 50% discount on something, I get concerned. Because what do they know? And then when you go back and look at the ocean, you look at the bigger ocean, you're like, oh, they're watching this. Or they would be watching this, because most of their wealth is here. Most of their wealth has been riding this. And when that's starting to turn, when that takes a tumble, now, this is stocks, right? The people who are invested in stocks, who have the money, are also invested in crypto. They're the real ones who really hold most of the crypto. Retail holds a small, let me correct that. Bitcoin, retail holds a significant amount. That's the reason why they want to shake us. Retail and miners hold a lot. So guess what they did? They shook miners. They went to China and said, you got all the miners, Let's shake them, scare them, get them to run, get them to sell. Luckily, miners now have ability to generate debt against their assets. So miners were smart. They loaded up on debt and didn't offload them as many of their coins. So then they came to us. They shook the market on us. They're like, guess what? Let go of your coins, you know? And many of us did. So the coins got shook out, but like many of them didn't buy up those coins. Most of the coins are still held. A lot of the coins are still held by people who got them back in the day, and they're going to need to shake those people out of their coins for Bitcoin. For many of the other projects, they do get into the initial sales and right off the ground floor. But the point is, those same people have most of their money here. They have like a drop in crypto, but they're tied together. You know, when stocks drop, crypto drops simply because if I have open positions in stocks, especially if I'm leveraged, which means I'm trading futures, and I have open positions in Bitcoin and crypto, then the moment I'm about to get a margin call on my positions, I would have to close my positions in crypto to cover my positions over there. And those things are now being done by high frequency trading bots that will automatically do these things. Do you notice the entire crypto market just is moving in like clear tandemness? It's not happening just by coincidence. All these things are hooked up to bots that are used in the traditional markets. The point is, this drops, crypto drops.
Is that what alerted you to this morning?
Yeah, because now this pattern, what it's doing and what people are saying, like normally when this happens, boom, everybody buys it up and everything runs up. But now things are shaky. And all of the kind of financial experts that I listened to had been screaming from the rooftops. I mean, the guy who the Big Short is made about has been like literally putting shorts in. It's literally called the Big Short, but like he put in shorts against many of the things which you would normally think are stupid to put in shorts in an environment like this, because he saw something coming. There's so many experts that have just been screaming from the rooftops, like, what do you think that happens that when things are like this? The next thing that happens is this, because that's just how money works, right? And
Is he shorting again, the Big Short guy?
Oh, he's way bigger short this time, right? Yeah.
Short on what?
On stocks.
On stocks.
Yeah, but also like
Not derivatives like that.
there are tech companies buying gold. Warren Buffett is buying gold.
Physical.
No, he buys stocks of mining companies, which is even smarter than buying gold, because when gold is necessary, mining companies go up. But that guy hates gold. He hates gold. He calls gold the shittiest investment there is. When he bought it 6 months ago, months and months ago. He probably did it, I think, a year ago, and then 6 months ago the news came out. But when those guys are moving into safe assets, you should really, in this environment, when those guys are going into safe assets, you know they know something, right? And now on the short term, I mean, we've been calling this, we knew like, okay, Black Swan event coming. Black Swan, when's it coming? I don't know, but Black Swan event coming. And a Black Swan event is as rare as a Black Swan. I don't know if anybody's seen a Black Swan. You don't. They almost don't exist. You have? Damn. You guys are.
There's so many now, they're grey.
Exactly, right? But the point is, when you're looking at this stuff zoomed in, and it starts to do this, where you start to see, first of all, looking at crypto, you know, something really started to kind of hit me. Like, if this whole cycle, let's just stop being permabulls, and let's just think like on the shorter time scale, what if this is a local peak? Because I remember in 2013, this is what happened in 2013, okay? We were sitting there, and this was before we actually even like knew our left from our right when it comes to crypto. And we're sitting here, and I had a bunch of friends who invested here. We got in, and it was like dollars. They got in around like $8 or something, some single digit dollars. And then it ran all the way up to 200 something bucks. And those guys made a lot of money. And we were like, this is insane. This is the most insane thing that's ever happened ever. And then it crashed. So we're like, okay, well, that's the end of it. That's the most insane thing that's ever happened, you know? And then everybody forgot about it. And the next thing it did was run up to $1,200 in 6 months. And we're like, hey, what is this thing? Like, apparently we don't understand what's even going on here, right? I see that same thing playing out now, where they front ran the market, and now they're going to let it correct, and we're going to have this point where people get shaken out. Everybody's, right here, nobody's scared. Leave them for 3 months. There's going to be some unease in the market. I remember this, like with this last dip that happened. As soon as it dipped, people were like, oh no, it's going to come back up. A month later, they're like, Sim, it's not coming back up. 3 months later, they're like, I'm on antidepressants. Like, this thing is not coming back up. And then it went up, and then they're all happy and they're jumping for joy. And now the same thing, like, we're like, we could be here. You see that? Came down, we could be there. And we could be going there, especially if stocks crash. Now, the guy who bought at 8 and just didn't care, he still got to 1200 unscathed. It didn't make a difference. But the person who got in here, got to here and saw how much money was there, and then went down here and realized all my money is gone, and that's how their thinking is, sold it, and they capitulated. And then they were angry, and guess what the next thing happened? The same cycle repeated and took it up to $1,200, and that person cries about, and I know a guy like that, who cries about how much money he didn't make.
So that cycle, so from start to finish,
Yeah. Yeah.
What sort of time frame was that?
All of them. That's the point. All the time frames. This has happened from January. This has happened
100 years or a minute.
Yeah, so this is 130 years from here to here. That's in stock market. This happened in 4 years. No, it happened in about 2 years. 3 years if you really want to go from the beginning. No, like 2 years. No, in Bitcoin, last cycle. This just happened in 6 months. Now, well, I guess like 9 months, 8 months. But the point is, this keeps happening on shorter, because the point is, don't convince you not to buy it down here. Rule number 1, keep you fearful. Do not get them to buy here, because that's where the smart money buys it.
Buying fear, selling greed.
And then get you to FOMO in around here, scare you on dips into selling lower. If you don't, you're going to get so confident that you're going to be like, this thing's just going up. Like all the people I remember the people that bought last year, they were like, it went up and we had a dip. And I remember the people, we had, it went up, we had a dip here. Some people panic sold there. But the ones that made it through didn't panic sell here. And then they got used to it. They were like, these are just dips. This thing's going straight up to $300,000. I'm going to keep it. And then what did they do? The next dips, they didn't sell it. Well, smart money was sitting there offloading like, oh yeah, you're not going to sell it? You want more? You want more? Yeah, it's going to 400,000. Guggenheim going to 400,000. And then when this dip came, guess what they were doing? They were complacent, just hanging out.
So from a strategic point of view, just paraphrasing a couple of things you said, the most effective traders are the ones who are dead. So
People who held for the longest, essentially. So if you have a holding strategy and you're not concerned about these ebbs, if you basically have money in the market that you're not afraid to lose, right? If you're like day trading and you're paying your kids' school fees or whatever, then you're concerned about all these crazy dips. And then you also said that you believe Satoshi Nakamoto was potentially FBI or deep state, or whatever you want to call them. And then another thing you said is potentially all these whales with 1,000 or more Bitcoin are in collusion. So there's this, seems to be like, I mean, I'm not putting words in your mouth. There's a bit of conspiratorial, okay. So essentially, and you're looking at it from the point of view that you are deep in crypto, you believe in the technology. I want to get paid in crypto. I want to infuse this into my business. This is a short-term blip. Right, so once again, I mean, we're looking at...
So that's the thing. Most people aren't you. Most people have put a significant amount of money into crypto. They're not feeding their kids with it, but they sure as hell can't go to sleep when that money goes down, right? And the most effective traders are the ones who actually trade the dips correctly. Because they make the...
How many people actually in real time do that? Right. I tried. I tried and I lost my ass.
95% of people lose money.
Right.
You do the same thing and you miss the final bull run, then you will make, it'll go from, last time it went from hundreds of dollars to like, It went from double-digit dollars to $100, but it went from double-digit dollars to $1,200 first. So if you knew this process and you don't do it, my thing is I'm a blend of both, right? I'm a blend of, we bought in last year, didn't do anything. Right here, we sold it. Like everything was screaming, hey, what the fuck? Market's gone sideways. Why wouldn't I sell it? You know, I've already made 500, 600% on the safest portfolios. So I sold it. And then it dipped. So we bought it. We got another 50%. Now we made 750%. Now it went up here and we sold it. Made another 70-ish%. So like, why wouldn't I do that, right? But if you don't understand any of this, you should be doing what he's doing. It's the simplest way of making sure you don't lose money. But the thing is, you still have to understand this process. You still have to understand this process because
One thing they always do say is that if you can go back in time and say something to yourself, that's all good, brother. If you can go back in time and say something to yourself, what would you say? And these guys are amazing traders, and they all said the same thing. I would tell my old self not to trade, just hold, because then I could sleep at night. I don't have to worry. And it would have gone up anyway.
I mean, if you look at Bitcoin's all-time lows each year, not high.
Yeah.
You look at Bitcoin's all-time lows each year, you
See this steady chart that just, and then you think, okay, there's 21 million Bitcoin. We know it's a limited resource. 18 million have been mined. They say 4 million have been lost. Then they say from 2120 to 2140, half a Bitcoin will be mined. I mean, we'll all be dead by then, but.
Yeah, but here's the thing, I don't invite it. Because when you understand this process, I'm interested in projects that are in their initial expansive growth phase, right? Bitcoin, as far as I'm concerned, Bitcoin is for the person who does that, right? You want to buy it and you just want to hold it. Sure, you're going to get your, I don't know, a few 100% return in a year, maybe 200% return averaged over the last, if you just held it, it was 200% over the last year, which means you get, if you put in $1 million, it's $1 million, 2 million, 4 million, 8, 16, 32, 64, 128, 256, and 500 million. 10 years, you get $500 million from $1 million. Fantastic strategy. And you can't miss. If you just buy the right projects and you just hold them, you can't miss, right? If you bought Solana last year, you just did 100x in the last 6 months, right? So I'm of the mindset like, this is completely new stuff that's coming out. I am not just gonna go, I don't wanna sit complacently back and let all of this opportunity pass me by, right? For me, understanding this process gives me the solace of knowing these bigger ebbs and flows. And even you, all you have to do is just buy it 2 years ago and just wait until it's, I don't know, 30 times where you bought initially, and then just sell it. And then just wait another year, wait for Bitcoin to bottom out again. You get like 60, 70% discount. You just have to make one trade every 2 years, and you would multiply your gains about 10, probably 15 times. You know, so that's where I'm like, I like a blend of these two things. I don't believe in just holding. I mean, sure, you'd save 30% on taxes, but if I'm making 100%, I'd rather pay my 30% on taxes or have a tax strategy around it. But I like a blend of these two things. I like the not trading fast, don't trade. But I'm a carry trader where I literally I wait 6 months, 7 months, 8 months. When the signals all start to scream at me, hey, sell it, you made a lot of money, I sell it. And then when it goes down, I just wait and wait and wait. And once the whole thing's corrected and all the psychoanalysis and everything's telling me that the market bottom's here, then I buy it again.
Obviously, I like seeing my money drop. Yeah. And so it's hard to sit through that and know, like I was in 2017, I watched all my money just go evaporate.
And I emotionally sold. So I don't want to see my money drop again. But that being said, I just know, like I had one investment that if I had not done anything, it was sky's the limit. But emotionally, I traded and I sold it. So learning the lesson from the lesson of being just hold no matter what, and get emotionally engaged and involved, easier said than done. I would like to be in a position where I'm like, okay, I can sell now, wait 6 months, and buy 5 times as many coins or
I zoom out to the yearly scale because it's like the shorter scale, and you made a really good point. There's some people who can't go to sleep when they trade. There's some people who can't go to sleep when they hold. But the thing is, you got to know what kind of person you are, right? Like me, I sleep like a baby no matter what, because I don't care and I don't trade, right? But you got to know what kind of person you are. If you're the anxious person, you do not want to be on this roller coaster. If you don't like roller coasters, you can't be on a roller coaster because you're not going to sleep. You can't sleep on a roller coaster. If you're somebody who's like super analytical and robotic and just likes to execute things very clearly and like doesn't have a life, then you become a trader. Okay? If you have a life and especially if you have a spouse or you have a loved one who you want to give attention and time to, you can't be a trader. You simply can't be a trader because 95% of traders will lose all their money. 5% of traders will take all of their money, right? But there is a kind of a middle ground there. You can at least understand the bigger ebbs and flows. Like, okay, stock market's going to crash. It's not going to happen tomorrow. It's not going to be like, it's done. All the money, trillions of dollars from stocks has flowed out and everybody's taking the money around with it. No, it takes time to play out. So now we're seeing this. Let's see how it goes. A couple months from now, we'll probably talk again and be like, well, that went well. Things have corrected. You at least will be like, you know what? It's cool. I know the money is going down because of all this other shit going on in other places. But when the stock market, I want the stock market to crash. I want it to crash so bad. I've been looking forward to this for like 10 years. I swear, I'm not even kidding. I've been waiting for it for 10 years. I've been like sharpening my tools. I've been like learning crypto and like getting ready for it and just ringing bells like it's gonna go, because
Something about stock market crashing.
yeah.
Is that, for example, in the S&P 500,
Yeah.
a huge part of the value of the S&P 500 is held by Apple, Facebook, Google, and the FANG stocks. And so it only really takes them to take a dive for then the whole thing to look like it's diving. So it's not really the whole stock market, it's just those ones that are propping it up, pushing it down. So maybe if, for example, we're heading now into web version 3, and as things change, and so we're not going to need middlemen so much as we used to, those people who are middle people in a way, they won't be so useful. Like George Gilder wrote that book, Life After Google. We think Google's everything, but soon Google won't be really necessary.
I completely and wholeheartedly disagree.
No.
Respectfully.
No. Just a thought.
Crypto is not here to get rid of religion. Crypto is a bunch of computers that don't have men or women or human emotions or feelings. They're here to take over the entire world and turn it into computers that will still be controlled by the same people. It's made by them. They're not going to let us make this equanimous, free, open, Google-free world. Here's how they're going to do it. And again, conspiracy theory, but vetted by all the knowledge that I have about the world. Get ready for the internet to only be accessible with a digital identification. The internet only to be accessible by the digital identification. And guess what that ID is going to be tied to? Okay?
We're not going to let it happen.
We have no control of it. We don't run the internet. It's the same way we weren't going to let our rights go, right? We weren't going to let our children be injected forcefully with things. We weren't going to let our businesses be shut down. We weren't going to let them put us in our houses like prisoners. How long did that take? I think it took about 2 weeks. For the entire world, it took about 2 weeks. It took months for us to submit. It took years for us to start rebelling in a way, but it's happening. It's happening around you. I wish I could run the chart pattern analysis on humans, but that analysis goes on the 100-year scale. Read the book called The Fourth Turning. It tells you how, and we'll paste it in the group again. I keep forgetting to do that, but it tells you how human civilizations go, and we are in the crisis moment, and it goes until 2030. And in that, we got nothing. The only people who are going to make the change that we want are our kids, and then their kids. Our kids have to make it, and their kids have to implement it. Otherwise, it's hopeless. We got 100 years of this darkness.
Back to what you were saying, so why are you waiting for the stock market?
Because think about this. Like all the money is sitting in these silos. All of it. All of it. I want it out.
But it's going to go in bonds and cash.
No, it isn't. It's going to bonds and cash to become safe in turmoil. But guess what? You know how many countries have defaulted on bonds? I could get you a list. Is the US not defaulting? Smart money understands that that's not the case. What? The US has more debt than we can pay with the cash that US makes? How about this? There's, I think, $300 trillion of debt in the world, and there's $150 trillion of all the money that's cash or money that we think about. How are we going to pay $300 trillion of debt with 150? It's just not. The debt-based system is not meant to be paid back. A debt jubilee has to happen.
So it sounds like you think that the money from the stock market is going to be released and available, but it seems to me like the cabal's just going to take it.
Yeah, but they don't care about money. Money is absolutely useless to them. Money is just us working for it. That's the only thing that gives the value to money. The money the value. What they care about is power, but also they already have all the money. They don't need to take all of our money, which is like a sliver, but they have all the money. They've invented a new asset class. And what this asset class allows you to do is it allows me to move into assets which are completely insulated in many capacities. In the short term, no, they're correlated, but on the bigger term, they're insulated from that whole ocean. Because I can inflate the dollar currency supply as much as I like, and the assets will always inflate against it. Gold is supposed to inflate, land is supposed to inflate, crypto inflates. So you've seen how crypto has been inflating already. They've invented a new asset class that's the arc for them to get on while they collapse the old world by devaluing the currency to a point which takes everything from everybody. And that's how you will own nothing. You'll own it. You'll have $1 million in your bank account, but it's like having 1 million rupiah. At one point, 1 million rupiah bought this place. Now 1 million rupiah buys this. You still have the 1 million rupiah, but somebody came and took 999,000 rupiah out of that, right? Same thing's happening with the dollar. What they're going to do with their money is, no, this game's done, so it's going to crash. They're going to move it into dollar and bonds. Next thing that's going to crash is dollars and bonds. Over the next 15 to 20 years, dollar's going to get crushed. It's already being crushed. Then the value needs to flow somewhere. Gold is being manipulated already through paper gold. It's not going to gold. Gold is going to go up in some capacity, but it's going to be suppressed the whole time. Gold, silver, all that stuff. You could put it into real estate, sure, but like, real estate's giving you 7, 10%, 25% if things are inflating like crazy. The only place that money needs to really go to that has absolutely undeniable returns, Bitcoin. So I am so happy. I am jumping for joy for this to happen, because that is going to be the catalyst that moves the money in. Now, how is it going to happen? Because you think, like you're thinking, the way you're thinking is you're saying, they have the money in the stock market, they pull it out into their bank, right? They don't do that. They pull their money out and put it into bonds. It's not actually turned into cash. It's put into a different investment and it flows back and forth. The new system that's coming, the ISO 20022 system, I'm sorry I keep saying this number again and again and again, okay? ISO 20022 system. Read it. I literally have the ISO 20022 for Dummies book printed and laminated, and I read it while I go to sleep, right? Because all of the money in the world is now going to move on a new system. And the new system is going to be based on a singular language called the ISO 20022 language. Every single cryptocurrency, every single stock exchange, every single derivatives exchange, every single bank, every single everything is going to be hooked into the system, where money now leaves our purview and is controllable by the computers.
Now we know which cryptos are invested in.
Shut up. Yeah, exactly. Now you know which one I'm holding and which one I did not sell. Yes, yeah.
To continue what I was
Sorry.
saying.
Yeah.
I was heading somewhere.
Yeah.
You said that we will then need the vaccine to access our digital capital. Yeah. So then we're dead. So then what good is all of this if we end up having to get this and it kills us?
But not everybody gets the vaccine.
Which I'm not saying there. I have ways. I have ways. I'll tell you when the camera's off.
But not everybody.
We're not. Sorry. We're not going to be sitting ducks. Don't worry. Our generations, the people who were in this in World War II, and the ones who they were here 100 years before them, they always made it. There's always a way. Here's step number one. The whole thing is do not leave Indonesia. Okay, that's all I can tell you. Step number two, we'll figure it out. Right? Step number two, generate wealth. Become wealthy in Indonesia. That's it. If you're wealthy in Indonesia, you're good. You're going to be just fine. But it's not going to be this open free world. The internet is about to go through a shutdown at some point. Within the next 5 years, 5 to 10 years, there's going to be a point, internet's going to shut down. Internet's going to shut down. Yeah. For like 23 hours and 46 seconds. I don't know.
Are you saying forever or for
No. So the internet we know, is going to be shut off, and it's going to be blamed on something, and then the new internet will come online, and the new internet will require digital identifications to participate in. And I would, in my approximation, I would put it at somewhere around 2025, because that new banking system would have to be fully live, and that banking system completes its implementation around 2025.
Is that when 5G clicks on too?
All of it. No, 5G is already being implemented everywhere. Jakarta has it. As a matter of fact, Wuhan and Milan and Spain were the three places where they implemented it. And surprise, surprise, something happened there. Weird, really weird stuff.
Could it be the hostile alien invasion that we're anticipating that creates the massive fear?
I mean,
precursor to the internet being shut.
it would be really smart for them to like just make droids or something that look like aliens and then send them out, and then we think like whatever. Who knows? Who knows? We're all a bunch of aliens anyway. You're a bunch of reptilians. Right? Let's come back to crypto. Yeah. I don't. I'll be on a farm growing food with my hands and like pulling up my water, and I'll have like solar. No, I don't know. Please don't. I don't know. I know as much as you. I've just researched some of this stuff. I just approximate things according to like how I think they're going to work. I don't even know who they are. I'm just kidding. We know who they are. The World Economic Forum, BlackRock, Blackstone. Okay, sorry.
The new internet, the ICP by any chance?
Sorry? The new internet is going to be based on ICP 100%. Yeah, simply because.
There's someone that said in the chat, no one owns the internet. Impossible to implement QAC to access the internet.
Nobody owns the internet?
That's what he said. No one owns the internet. Impossible to implement KYC to access the internet.
I will see you in 10 years. I probably won't, because you won't KYC in, but like, I'll see you in 10 years. Hey, if that's how you think the internet works, that's not how the internet works. Like, I'm an electronics engineer. I've literally built those electronics from the ground up, like physically with my hands. When you look at the details of how internet moves, like, did you notice the internet went out here? Right? Did you notice that? The internet went out for a little bit? And apparently they have a video of a shark biting a cable. Yeah. Convenient that they had a camera.
How stupid is that? They have a camera and then like underwater, the shark is biting.
Exactly.
The shark's like.
Only in Indonesia are they allowed to do that kind of stuff. Okay? Those cables, whoever's saying this, those cables are pinch points, which I could put a KYC system on. That you're not allowed to pass through those cables unless you're KYC. I can do the same thing on the fiber optics networks here. So what's the problem here?
Could you use China as an example?
Sorry?
China with a social credit system.
Sure.
This is a precursor to what potentially the Chinese social credit system.
100% that's what's going to happen. China is the beta test for the world. So the social credit system is coming. We're going to have digital identification to access the internet. And it's not going to be done by like the powers that be forcefully on us. We're going to do it.
That's exactly also how ICP works. You have to have
an ID. Maybe ICP is going to be part of that process. All I know is the ISO 20022 system combined with XRP, XLM, Algorand, XDC. If you buy all these and lose all your money, that's a you problem. Okay? Quant. The way that system is built, the way the developers themselves are building it, listen to the people who are building it, is that it allows you to set up a banking system that every single node point on that banking system is controlled. And that control goes to a central bank, and the central bank gets to give auxiliary control to individual banks to do the last mile transactions. Okay, if you don't know what any of this stuff means, this is how all the money in the world moves. But the point is, then those nodes come to a central bank, and then that is all hooked up to a global on-demand liquidity pool that allows money to flow back and forth seamlessly using this one system. On the front end, you hook up interoperability layers, probably built on Corda and Algorand and a bunch of other guys, that hook up into all the cryptocurrencies to automatically trigger all the smart contracts on those cryptocurrencies. And then money is allowed to move automatically without you even being involved in the process. And then you combine that node point, which is your bank account, with the fact that there'll be central bank digital currencies live from your government, which will be controlled by whichever country you're a citizen of. Then your country will control you being able to spend any money. And if your country decides that you don't pass KYC, you can't even pay for the internet that you're planning on accessing free. Know your customer.
China basically now, if you're a journalist and you speak out against the party or the system, they can stop you from getting on a bus. They can stop you from traveling.
Everything.
They can stop you from. They can tarnish your bank. They can even tarnish your family around you.
They can stop you from getting food. If you don't have the right social credit, you are officially out of the economy. They can make you disappear. Uyghurs, which are a certain sect in China, are not allowed to operate within the economy. And that's what's going on around you. If you think that we're going to build a world that's going to all of a sudden completely undo all of that stuff, we are. We are. But the way we have to do it is by completely not using their system, right? You want to fly on flights? You want to go to the grocery? You want Pepito? Okay, you want to go to Pepito? Go to Pepito. Right now, what happens to Pepito? You been to Pepito? Go check out Pepito for a second. You got to go in there and scan and download an app to contact trace you and already KYC you. Go to the beach. Go to the beach. Only odd and even number plates are allowed to travel on that road. You know, so it's already here. Like, what system are we waiting to be implemented? So here's how we do it. One sec. Here's how my plan is, and I can say this on camera. Build a place, grow my food, pull water out of the earth, generate my own energy, be 100% independent, and exit the internet within the next 10 years. Easy peasy. Barter, sure.
That's great on paper, but for me, example, if you're wanting to travel and go back to London and see the
That's too bad.
that's too bad.
That's too bad. I'm sorry, you want the privileges? You want all the privileges that they have built for us? The people who own everything, the people who put the capital up to pay for that airline? Then you got to follow their rules. You want to use the internet that they paid billions of dollars for, that every single tower that they've set up, they paid hundreds of thousands of dollars for. If you want to use their system, then I'm sorry. What right do you have to tell them, I'm not going to follow your system? You know, we had rights. We used to have human rights. But anybody who knows international law understands that as soon as you inject something with an mRNA modification into your body, you have officially signed away the right of human rights, and you become property of a corporation. You are patented at that point. You're property of the patent holder. So most people have officially given away their human rights and become property of a corporation. And if this sounds like crazy to you, read the Supreme Court and read the law. That's just law. So either you go build your own thing, so how does crypto tie into all this? I take my wealth and I get onto the boat that they built for themselves before the flood comes, which is the crash of all their old systems. Then they come with their money onto the same boat, and I'm sitting there with buckets on the boat. I fill up my buckets, and then I leave their boat and I go build my own farm. Visually speaking, that's what's going on, where we are leaving the old system, moving to a new system. And I'm just joking about leaving the boat completely. There's ways of operating within the system without having to be completely exited. But the point is, we're moving to the new system that they've built so that they can inflate away the value for everybody, right? Well, I'm out of that system. I'm 100% out of the banking system since 6 months ago. I keep all my wealth in crypto. And then as soon as I need to get some cash, I take a little bit of crypto and I send it to the bank and I spend it. Right?
So you're still in the banking system.
I mean, I need papito.
So crypto basically is your savings account and fiat is your spending account, in essence.
Yeah. No, crypto is my wealth generation vehicle. It's not a savings account. I'm not just putting it into and sitting there. I'm growing my assets actively and other people's assets actively. And then it's also like, if you think about it, if we're at the internet in 1997, and sure, there might be a stock market or a dot-com bubble coming, but imagine you just got into like 30 different good projects back then. Now you'd have life-changing wealth. You could buy islands, you know? There's some kid somewhere who mined a little bit of Bitcoin back in the day who can buy an island today because he mined some Bitcoin back in the day 10 years ago, okay? So crypto is my wealth generation vehicle. And then my revenue streams are my savings, because I don't just go to crypto and sit in crypto. This is another mistake a lot of people make. They just go, I'm gonna go to crypto, put all my net worth in, hope to God the internet doesn't shut off tomorrow, right? Good luck with that. Like, I go to crypto during the bear market when nobody's looking, get in, let the markets ride up, get out, go to cash, go to stable coins, let the markets crash again, make sure that it's not a bear market, get back in, repeat that process until you see, okay, there's some kind of blow off top, or I've made enough money. I have targets set on a piece of paper that I just religiously follow. Once I've made that money, now we're sitting for a year, 2 years of bear market. Okay, then I take that cash, I take it to a bank, and I say, give me debt. And I take on as much debt as possible against the cash. And then I take the debt, which is at 7%, and I go turn it into revenue streams, which make me 100% within a year. And then I take the return and I just pay off the interest, and then I go back and buy more crypto with 100% return. And then I take that crypto to the bank and I say, give me more debt. And they give me more debt, and I take that debt and you go and turn it into more revenue streams. Now I take all the revenue from the revenue streams, plus whatever interest, everything, whatever profits I've made, and I go back to the bank again, and I go buy some crypto, and then I go back to the bank again. And I go, give me more debt. And they're like, we'll just keep giving you debt.
Real world banks, decentralized finance, learning platforms.
This is where you're really gonna hate me. Real world banks. The way the wealthy do it. I have no interest in like jumping onto DeFi platforms which get hacked all the time and don't have enough liquidity. I do it the way the wealthy do it. I want to go where the $1 trillion is sitting, go to those banks, make good relationships, use debt to generate revenue streams, use the cash from that to generate assets, and use the assets to generate debt. But you don't sell the assets, you don't sell the revenue streams, and you just get more debt.
So how does that play out in the future when the whole banking paradigm shifts?
The banking paradigm is going to shift to the new banking paradigm,
So how do you do this offset when that happens?
DeFi. At that point, DeFi has matured to a point where the wealthy will start to do it through DeFi. And at that point, you just switch over to DeFi, decentralized finance, right? And at that point, banks will exist too. It'll be much easier to borrow at that point.
If you're off grid, how do you?
See, that's where you're kind of misunderstanding what I'm saying. I'm off grid, but I have people on grid. You know, that's where the wealth piece comes in. You're wealthy enough to have people. When I need to access the internet, there'll be somebody accessing the internet for me. You know, and it'll be, you know, account managers and teams. Like we have teams of asset managers right now, and they'll be the ones actually doing all this stuff, right?
So if you believe decentralized finance platforms now, for example, the Terra network has one that's many.
Yeah.
You wouldn't be looking at it's not viable for you. So you don't suggest that.
Regulatorily speaking, Terra has not had the green light yet. Regulatorily speaking, they just came after Coinbase for giving 4% to people. You're telling me they're going to let decentralized finance into that interoperability layer that hooks into that new system? I don't see that happening. So until that happens, I'm standing on the sidelines, and I don't think that many of the stuff that people are doing in this world who think decentralize everything, Yeah, that's all great, but there's an interoperability layer that will need to be interacted with to turn it into value that's spendable in the real world. Those systems are nowhere near at that level. Aave is the only one that is part of the banking cartel and seems like it has the right backing, and they'll make sure that they regulatorily get them through. But until that happens within the next 5 years, why? Right?
Documentary.
Now, I believe I'm pulling people out of the matrix. That's what we're doing here today. That we are in the matrix as we speak. I mean, Bali's as on the edge of the matrix as it possibly can be, but we are. The matrix is in our heads. You know, we were all convinced into giving up our own freedoms and our own rights because we don't understand this game that we just looked at.
When we turn off the camera, it blows our phones up so we can listen to some really good shit.
Okay. Thank you so much for joining. We'll see you guys next time. Okay. Yeah, we went off topic a little bit. Point is, no panic. If you're a long-term holder, just hold. Like, again, not financial advice, but just hold. But if you're a shorter-term trader and you're somebody who actually wants to get in, do your own research on it. The data is right there. TradingView. Please go check it out. And we'll see you guys next time. Bye.